Welcome to Markets Now. I'm Michelle Rook along with Don Roose, U.S. Commodities. Mixed closes in both grain and livestock futures trade today, and specifically in the grains, we did see the row crop sector higher done. And how much of that was technical in nature versus just these hot, dry weather forecasts?
Yeah, I think Michelle is a kind of a combination. We came into yesterday, deeply oversold in the wheat market, looking for some kind of a catalyst to give us a bounce. The weather forecast certainly gives the market a pause for the downside move, see if we can get some upside pressure to the upside. But next 10 days looks like we're really void of any moisture for right now. And then, of course, the temperatures get really extreme hot going into most of next week in the gut side of the Corn Belt. So we'll see what that does to the yield going forward. And I think that's going to be the key, as the Pro Farmer Tour is going to be going on right in the middle of some of this extreme heat.
Not only that, but Don, we hear about so much variability, and it's going to be pretty hard to achieve some of the high objectives for yield when you don't have that uniformity, isn't it?
Yeah, I think most definitely, you talk about uniformity. You look at Iowa, the government has us at 203 bushels an acre. The record is 204. We've had really the northeast corner of Iowa has really been a struggle here, even as of right now, with some moisture deficits, and then scattered around the rest of the state. And then we were dry in central Illinois for a real long stretch, and then some other dryness around the areas. So like we say, to get a big crop, record crops usually have to have that big consistency. This has been a year where it's really been an up and down the ladder and very much variable. So I think it's going to be a tale of the combine here going forward, with a lot of guesses in between.
Yeah. So supply is one part of the equation. Demand is the other side. And new crops, soybean exports were better today. Corn, we still have some work to do, and we still have a lot of competition from Brazil, don't we?
Yeah, the corn market, first of all, that's the one that as you get from the middle of June to basically the end of August, you just have Brazil coming at you with this actually a record corn crop. So really what's happened this summer is every time we try to rally, Brazil farmers are selling their new crop harvest at our old crop higher prices. So that puts a cap on the market. It was kind of a race to the bottom, but they're about 75% harvested now. So that's winding down. Basis levels starting to firm, and actually we're very competitive. We haven't been, but we've been competitive. We're competitive now, September through November, the end of the year. So that's a good sign for our markets, and we'll see if these exports can pick up, Michelle.
No doubt. We also have to get that wheat market to quit going down, so it quits pulling the corn market with it, right?
Yeah, that's a good point. I mean, it's been the wheat market has been racing to the downside, trying to hit some of these early summer lows on wheat. December 608 spike bottom target. It's a market that has probably overdone it to the downside. We've got Argentina still in a drought. We've got Australia crops probably going to be a dry, droughty one with the El Nino. So in no respect for the Russian-Ukraine situation yet with the export corridor, but that's also a wild card. So it's one of these markets oversold, Michelle, been anchoring the corn down, but it's one of those markets you want to be careful getting caught at the bottom of this market.
Yeah, and of course, Russia undercutting the United States, undercutting everybody in the globe. In fact, India is even buying from Russia right now, aren't they? Or going to?
Yeah, I mean, that's exactly right. Russia had largest wheat exporter in the world. They're just looks like they're trying to get money. They're just clearing their supplies out at whatever price is available, and even selling wheat to India. That ought to be a sign. India is usually a wheat exporter. Looks like they're going to import maybe up to 9 million metric tons of wheat. So when you see a big buyer come in like that, that usually means that you're getting closer to some kind of big support in the market, Michelle.
Yeah. So, Don, when do we get some respect for what's going on with the Black Sea supply disruptions, as well as what we're seeing with Southern Hemisphere issues in terms of drought or crop disruptions there?
Well, and that usually is around this time. And remember, we're going to start planting the hard red winter wheat as we get into September in some dry conditions yet. So usually it's a combination between between a focus on the weather in South America And usually we start to focus on that right now, the Southern Hemisphere. So I wouldn't be surprised if that's the next thing that we talk about, some dry conditions, Argentina, Australia, and then keep an eye on what the planting progress is in Argentina and Brazil on the corn and soybeans.
Yeah, definitely some places to note. I also have to ask you, technically, you said the momentum has quit as far as downward momentum in corn and soybeans, but how much recovery do you think we can expect?
Well, it's always work in progress. And it's one of these things when the funds are short. We know seasonally this is a time of year where seasonally, if the crop's there, we march lower into the fall, but we can get a bounce right now, an intermediate bounce, we'd call it. But, the corn market, it looks like if it can get over this 493 area, it might get some buying come into the market, then $5. And there's that gap target, 525.5 on D's corn. Same thing on soybeans. We did hold, $13 for the most part on November soybeans, trying to add some risk premium to the market for the hot, dry weather coming at us. The market's trying to turn technically positive. There is a gap at 13.79 target on November soybeans if we can start to get some upward momentum here, which could easily happen, Michelle, with the Pro Farmer Tour and then the heat coming at us next week.
So cattle market down for the fifth day, Don, and do you see more downward pressure in that market? It looks pretty tired here. And has it been, a function of, just some profit taking in that market, or just the cash market kind of being a little iffy?
Well, we've been talking about this bull market for what now, a year and a half. So, there's a lot of bulls in the market. It looks like, Michelle, unfortunately, some of these funds that have been in there for a long time are starting to liquidate. That's a little bit of a warning sign, but we're at a discount on the futures versus the cash, very similar to the hogs. We should seasonally, we usually try to catch right in here, but we better catch here. The fourth quarter supplies, just to remind you, are larger than last year. So demand's going to have to pick up at the same time that the hog market is in a liquidating phase where we're seeing more numbers come at us. So you've got kind of this collision course in the cattle with demand. Can it hold up as supplies are going to be bigger here? And we're still in a cyclical bull market. But the key always is in these, Michelle, cyclically, when do you put in the top end? It's certainly before we start into the real buildup phase.
Yeah. This has been a cash-led market, though. And so with cash being a little steady to a little weaker here so far this week, that seems to be a pressure point. Do you see cash, though, being able to kind of hold in here for a while?
Well, the cash market actually has surprised the trade. It actually didn't get that big summer break how you typically do your break. And so, I think it's a market that probably tries to hold right here. Packers losing $25 a head right now. So you got to watch his attitude too. If he doesn't move the meat, the market tops out here. Like we say at the retail level, either sell it or smell it.
Yeah. So you mentioned hogs and the discount that we're seeing futures to the index. And, is that enough to put a little bit of a floor in this market or not?
Well, it's a technical market that wants to continue to work lower, but we just, very similar to the corn and wheat and soybean market, we just oversold. Seasonals are down. We're at a discount in the market. It's a market that probably tries to bounce a little bit in here just because of the big discounts. The government's holding prices substantially higher than what we're talking right now on the board. But it's the cash market has been weakening, Michelle. We've been down $5 on the index here in just short order. So I think it's catch up. The trade wants to be bearish into the fourth quarter just on supply liquidation that we know has been going on, continuing to go on. But the long term, it looks like that could turn into more of a positive bull market as you get into 24 at some place in time, Michelle.
Yeah, no doubt. Short term bearish, long term bullish. All right. Thanks for joining us, Don Roose, U.S. Commodities. That's Markets Now.